Welcome to the Young CEOs Mastermind Call. We have these every single Sunday at 8 p.m. Eastern Standard Time. I am your host. My name is Andre Kennedy, aka Free Play Dre. And on these live sessions, we go over valuable information concerning credit, funding, and various other topics such as investing and what to invest into and a lot of different areas. So if you don't know who I am, my name is Andre Kennedy. I'm 31 years old as of today, and I've successfully acquired over $150,000 worth of credit capital. And I don't stress that lightly, but I've been able to do that utilizing a sequence which is called credit stacking, and a sequence that I've put together that I've also incorporated into a course that teaches you exactly step by step on how to do this. Now, this is going to teach you how to secure $150,000 worth of credit capital, even if you have bad credit, okay? Because I understand that a lot of people don't start out with good credit. A lot of people don't have boosts. A lot of people don't have the information that's needed, such as financial literacy, to get to the next level, which is why I created a course. Now, you can find my socials here, and you can find our link down there if you want to join our credit community. We have a community full of members, and we are teaching them daily on how to build, leverage, and even repair their credit. So today we're going to be talking about some credit basics. I had a couple of my students from my credit community ask me to do a video on these topics. Now, we're going to talk about utilization, which is one thing that I'm going to stress, and we're also going to talk about the credit repair process and how you're able to get items deleted from your credit report. So if that excites you, make sure you stay tuned throughout the entirety of this video. So I'm going to be sharing my screen today. I like to do that so I can give you guys a visualization of, kind of what I'm going to be talking about and where I'm going with, this video. So let's go ahead and dive into the information. I'm going to start off, like I said, by sharing my screen. Okay, and hopefully you guys are able to see everything that I'm able to see here today. Now, what I want to pull up is this, okay? And I'm going to minimize this so it's not so distorted. And this is my laptop screen, so hopefully you guys can follow along with me here. Okay, so in this chart, you guys are going to see, okay? Now, this chart is something that I like to reverence anytime I'm talking about credit basics, okay? And why do I like to reverence this? Because this is the chart that actually makes up your credit score, okay? So we're going to talk a lot about this today because this is dealing with the credit basics, okay? So when you think of your credit score starts out at a 300, and it ranges from 300 all the way up to 850, okay? So the highest credit score you can have is an 850, and the lowest credit score you can have is a 300, okay? And, you pretty much start out around, 600 or 500 just if you're able to establish a credit score, okay? So I'm going to be doing this video as if I'm talking to somebody with zero or no credit or even bad credit as of to date, okay? So I'm going to help guide you through this whole process so that you can understand, and this is for my students, so that you can understand pretty much how credit works and how you're going to be able to build it, okay? So if you don't have access to the course, make sure you guys are going to dazzlu.com, and you're going to want to click Get Started. And I'm going to have pre-recorded videos that breaks all this down in detail. But today, I specifically want to talk about these certain things because my client, one of my students, asked me to do a video on this, okay? So I don't want to ramble on too much. But listen, 35%, and you can maybe follow my cursor. You can see here, 35% of your credit score is, which is the blue, your payment history, okay? So what does that mean? That means you really need to make your payments on time. As you can see, this is the highest category of your credit score. This makes up 35%. So one missed payment can drastically affect this category, which will drastically affect your credit score, Okay, and hopefully you guys would understand that. So it's very important to not miss payments. Okay, one way that you can avoid missing payments is going to be by setting your bills on auto pay, and just simply paying your credit cards off on time. Okay. Now, majority of what you're going to be doing to build credit is going to involve credit cards. Okay, because that's how you're going to pretty much establish credit, right? Is having credit cards. Now, the difference between credit cards and longevity loans, okay, is quite different, right? A credit card, you charge a credit card with a balance, okay? You might go to Walmart, you might spend money on your credit card, but initially they might have given you $1,000 limit. Okay, so let's cycle back for a minute. Let's say you got $1,000 limit on a credit card that you're able to use pretty much anywhere. Let's just say it's a Capital One. Pretty much everybody knows a little bit about Capital One, or you might have heard of Capital One before. Okay, so let's say they gave you $1,000 limit. Okay, now when Capital One gives you $1,000 limit, you are expected to make on-time payments. Okay, now you're not going to have any payments because you haven't made a transaction yet. So let's say you take that Capital One credit card and you go to Walmart and you spend, $200, okay, on groceries. You're expected to pay that on time every single month, and hopefully you pay it off the first month in full, okay? So we're going to talk a little bit more, but keep in mind that Walmart credit card, because I'm going to keep it in mind that Capital One credit card, because I'm going to use that as a reference throughout this video so that you guys can kind of get the gist. We're just talking about, for the sake of numbers, a $1,000 Capital One credit card, okay? And I'm going to teach you guys pretty much how you're going to manage it if you do have that type of limit, okay? So in the world of credit, 35% of your credit score is made up of your payment history. So always make sure you make your payments on time. And as long as you make all your payments on time, your payment history will be 100%. Okay. Now, if you miss a payment, okay, and the only way you can actually miss a payment is, let's say you go to Walmart and you spend that $200. You have 30 days from the initial transaction to make that payment. Okay. Now, if you fail to do so, that $200 will now accrue interest depending on what your credit card's interest rate is. So that $200 may accrue, maybe 5 or 10% interest. Okay. So now instead of paying $200, you might be paying $215 or $220. Okay. Because they tacked on interest. So from the point of you missing the payment after 30 days, you're going to accrue interest. Now, from the date that you accrued interest, which is after the end period of the first 30 days, now you have another 30 days to pay the balance plus the interest that was charged. If you fail to do that, now that's been a total of 60 days, okay, 30 days and 30 days. That's been a total of 60 days, which is about 2 months with the original balance plus interest. If not paid in full, okay, not only will you accrue interest every other month, but now you're starting to get into late payments, okay? Now, after the first 30 days and the initial interest is accrued, you're going to have what's called a minimum balance, okay? A minimum payment due. So you might not have to pay the whole $215, okay, which is the 200 plus the 15 added as interest. You might not have to pay all of that right up front, but your minimum payment needs to be paid at least, okay? So if you have a $215 balance on that $1,000 Capital One credit card, you need to pay whatever the minimum balance is. And that minimum balance might be $35, okay? So moving forward, you need to pay that $35 every single month as a minimum payment at the least, okay? It's better off if you just pay it off in full so that you don't keep accruing interest, because every month, right, you're going to continue to accrue interest on that balance. Okay, so your $35, part of that might be going towards interest, and part of that might be going towards the principal, okay, which is the original $200 that was owed. You understand that? Hopefully you do. If you do, start leaving a like on the video so that this can be boosted and be shared with other individuals that need this kind of credit information. Okay, so that is a little bit about your payment history. Now, as long as you make those minimum balance payment, those minimum payments that are due, $35 minimum payment, it might be more, might be less. Okay, I'm just using this for sake of numbers and reference. But as long as you make that minimum payment on time every month, even with the interest being accrued, you'll remain at a payment history of 100%. Okay, and that will give you all of your 35% of your credit score. It'll give you all the points that you get when you have a full amount, which is the 35% that makes up your credit score. Okay, I know I'm talking a lot about numbers. Hopefully you're able to follow along with me as I'm going through this. Okay, but your payment history is extremely important. Do not miss payments. Like I said, you can put those bills on auto pay. Even with Capital One, they give you an opportunity to put your minimum payment on auto pay so that you don't miss any payments, and your payment history will stay at 100%. Even if you're accruing that interest, which is something that we really don't like to do. That's why we like to maybe charge our card with 200 or a couple $100, but then we'll pay it in full before we even accrue any interest, because we'll pay it before the 30 days is up. Okay? And as long as you pay it before the 30 days is up from the initial transaction, you will typically not accrue any interest. It's a zero interest loan, essentially. Okay? As long as you pay it within the first 30 days. Okay, so that gives you a month. Now, there's a lot more things that I can add to this, but for the sake of not overloading you guys, we're just going to leave it at that for payment history. Now, the second biggest category, as you can see, equals 30% of your credit score. And this is what one of my students wanted me to talk about. This is the amounts owed, or in other words, your credit utilization, okay? So that's going to make up 30% of your credit score. So let's go ahead and talk about the amounts owed, or your utilization. Okay, so let's use that $1,000 credit card as a reference from Capital One. Okay, let's say you got approved for a credit card with a $1,000 limit. Okay, now your credit utilization is now 1,000, assuming you don't have any other credit cards on your profile. Let's just say, for the sake of numbers, you have one credit card, and that credit card has a $1,000 limit, and it's from Capital One. Okay. Now, remember when I said you have 30 days to pay that $200 balance that you might have accrued at Walmart? Okay. If you do not pay that in full before the first initial 30 days, and they do tack on the interest, and now that balance, instead of $200, is $215, okay, with the interest accrued, that balance initially cannot be more than 30% of your credit card's overall utilization. Okay? So hopefully you were able to follow along with that, but I'm going to try to break it down so that you understand in, simpler terms. If you have a $1,000 credit limit, you are expected to spend no more than 30% of that overall limit. Okay, so what is 30% of 1,000? Well, that's going to equal $300. Okay, so your overall credit limit is 1,000, and your utilization, if you want to keep a good credit score, needs to be less than $300 on that $1,000 credit card. Now, let's say you have a $10,000 credit card for the sake of numbers. Well, now the maximum that you can actually spend without tanking your credit score is going to be roughly $3,000. Okay, so the higher the credit limit, the more you're able to utilize without it really tanking your credit score. Okay, so hopefully your guys are starting to get access or starting to get understanding of what I'm speaking about here. It's simply keeping under 30% utilization on whatever your credit card's balance is. So let's say you didn't get approved for a $1,000 credit card. Let's say your credit limit is only 500. Okay, you can easily find out what your credit limit is. Let me go ahead and go to my Launchpad, and I'm going to go to my calculator so I can show you guys live. Okay, so hopefully you guys can see my calculator here. Okay, so whatever your current credit limit is, let's say you have a $500 credit limit. You're going to multiply that times 0.3, which is 30%. Okay, 0.3, which is 30%. And that's going to give you the maximum amount that you can spend on that credit card without it tanking your credit score. Now, ideally, you don't even want to touch or get close to this. You really want to spend less, okay? Because 30% of your overall credit limit is the maximum that you want to spend without it tanking your credit score, okay? Now, ideally, you want to be around 10%. Okay, so if you had that same $500 limit, you're going to multiply times 0.1, it's $50. Okay, so this credit card is not going to be used to make big purchases. Okay, this credit card is going to be used to spend $50 at maximum. So you might want to pay for a subscription. You might want to pay for, quick runs to the grocery store or getting gas. This might be your gas card, where you can spend that $50 on gas and then you can pay it back the same day. But this is not, hard math, right? $1,000 limit times 0.3 is going to give you $300, okay, maximum. So if I have a $1,000 credit card, I'm not going to spend more than $300 on that credit card, and I'm going to pay it back in full before the first initial 30 days from the date of my transaction, okay? Now, if you do end up carrying that balance past the first initial 30 days and you accrue some interest, okay, so you accrued interest, so you maybe accrue, an extra $15 worth of interest, now you have a minimum payment and you have another 30 days before you need to pay on this balance, okay? That you need to pay on this balance. So $315. Now you've exceeded with this interest your 30% ratio. So it's very important that you pay this down in full very soon, okay? Because the second 30 days, this is now going to report on your credit profile, okay? So what happens is you get that credit card for $1,000, right? You get that credit card for $1,000. You spend $200, okay? You spend $200. So now you have $800 available utilization, but your balance is $200. Let me go back to the calculator. Your balance is $200, okay? And I know I'm jumping around with numbers, but just pay attention here, okay? So you owe $200, okay? Now, you let this sit and you don't pay it, you accrue interest. Now you have $215 showing up on your credit report as a balance, the amount owed, okay? Now, if that credit limit is $1,000, you're still under 30% utilization, but this is going to show that that credit card is now utilizing about 21%, okay? 21.5%. So you're going to need to pay this down. You're going to see your credit score drop a little bit, okay? Because now you have balances. And depending on how close that balance is to 30% of your utilization is what you're going to have to pay attention to, because if not paid, this will really affect your credit score. Okay, so that's why a lot of people have good credit without having high balances on their credit cards. And a lot of times you can even ask for a credit limit increase, or you can do what I recommend, which is getting also authorized user trade lines. Okay, because it's your overall credit limit. So if you have $1,000 credit card, you have another $1,000 credit card, that's $2,000, and that $200 balance isn't going to be as significant, okay, as it would be if you only had a $1,000 credit card. Okay, so hopefully you guys kind of got the gist of that. You're going to take your overall credit limit, multiply it times 0.3, and that is the maximum amount that you can spend on that credit card without tanking your credit score. Okay, so keep that in mind. Now, that was the two biggest categories. If you can maintain positive payment history and you can keep your balances under 30% ratios, then you're going to have a pretty good credit score, okay? And you're going to hit all the points within these two categories, which is going to make up majority of your credit. Now, these other categories are important, obviously, because combined they equal another 35%. But we're going to talk about these three categories here for a moment. Now, in the green, because this is the next highest category, which is going to be the length of credit history. Okay, so your average credit age is going to be a factor on your credit report. Okay, and it's going to make up that score. So, length of credit history means if I just started building out credit, my credit card is only going to be roughly 1 month old, okay, once it reports. It's going to say, hey, he just got this credit card, and this credit card is 1 month old. Okay, if you go in your Credit Karma or your Experian apps, you'll be able to see what the age of your credit limits are, okay? And that's why it's important to have revolving credit, because that credit stays with you for the entirety of your life unless you don't use it and for whatever reason they end up closing that account. Okay, if you don't use your accounts for 3 months, they're going to assume that you don't need the credit card, or it might be in the small print when you did your application. It might say, if you don't use this card within 3 months, we're just going to close it because we assume you're not using it. Okay, so it's very important. Maybe spend $1 at Dollar Tree at least once every 3 months when you have a good solid credit card. Okay, so that's going to make up 15% of your credit score, is the length of your credit history. Okay, so the longer you have these accounts open, the better. This is another thing that we offer when we talk about trade lines. Okay, when we're adding trade lines to people's profile, this is going to increase your credit history, because that trade line that we're adding has years worth of positive payment history. It also has low utilization, and it also has high credit history. Okay, those accounts that we're adding you as authorized users to are going to be 2 years minimum year old. Okay, so if you're just starting to build out credit, you might only have 1 month worth of history. But when we add that authorized user trait line to your credit profile, it's going to add years worth of history, which is going to extremely give you all the percentage points in this category, 15%. Okay, so it's going to help you out significantly. Okay, now moving on to the next. Hopefully you guys got the gist of that. Length of credit history is important. One last thing I do want to mention is this is the average. Okay, so if you have a year worth of credit history on one of your credit cards, okay, you have a year's worth of history, but then you go and you apply for another credit card, okay, and you get approved. Now this new credit card is only a month old, okay? So if we're going to take the average of your credit history, we're going to take the highest limit that you have and the oldest limit that you have, which is, your Capital One, for sake of numbers and credit cards, we're going to say your Capital One, which is a year old with $1,000 limit. You get approved for another Capital One, with $2,000 limit, and it only has 1 month worth of history. Okay, so now you have an overall credit limit of $3,000, but your credit age is only now going to be about 6 months. Okay, and where do I get 6 months from? Well, you have a year's worth of history, which is 12 months, and you just got approved for a credit card, which is only 1 month. So if you find the average, you're going to add them up and divide them by how many there is. So you're going to divide pretty much the 12 months by half, okay? And you're going to get 6 months. So now you have a 6 months worth of credit history. So that's going to significantly drop your credit score. That's why it's important, okay, to not go out and try to apply for a bunch of credit cards, okay, especially when you're trying to season your credit profile. This is what we call seasoning, which is allowing those accounts to begin to age, okay? That's what we call seasoning a credit profile. So the longer the history, the more points you're going to get, because that's going to make up 15% of your credit score, okay? So now moving along, we have two more categories to talk about before we start talking about credit repair and how the process works, okay? But it's important you know this information prior to, getting into the world of credit, because going into credit, this is what I still use to this date, okay? This is this chart that I still use today. This is going to follow you for the rest of your life, okay? So knowing this chart is going to help you with dealing with your finances and dealing with credit, okay? So we're going to talk about the 10% category, which is new credit, okay? Like I mentioned, every time you apply for a credit card, it's going to, one, lower your credit age, and two, it's going to add a new account to your profile, okay? So this can affect you in various different ways, okay? When you're in the seasoning phase, and I'm not saying it's bad to add credit cards, but when you're in the seasoning phase, we're not adding a bunch of credit cards to your profile. When you're in the seasoning phase, we're allowing those accounts to age. We're not applying for new credit, okay? So when you go and apply for credit, it's going to drop your credit score a little bit every time, okay? Because you're now adding inquiries to your credit profile. And this is what this category is all about, new credit, okay? It's all about adding inquiries to your profile. The less inquiries, the better, okay? And if you take that, what I just said, the less inquiries, the better, and you apply that to your credit profile, you'll see whether or not you're getting the full 10% worth of points or not, okay? So what I want to mention here as well is auto loans, okay? A lot of you guys, and this is major, a lot of you guys go to these auto dealers, okay, these car dealerships, and you guys are asking them for a loan or to get approved for these cars. And what they do is they shotgun your credit profile, okay? And what do I mean by shotgunning your credit profile? Well, they're going to add all of they're brokering your credit. So to speak, this is how this works. If I go to a dealership and I try to get a loan for this car that I want, which is the incorrect way to go about this, they're going to shop their various lenders, okay? So they're going to sit you down at the round table, and they're going to say, well, so-and-so, we're going to run your credit will be hit, and we're going to see which lenders will approve you. Well, if you take that for what it is, that means they're going to shoot your credit profile to about 20 different lenders, and they're going to see which one's going to give you the most money that's going to give them, so to speak, okay? Because they work with these lenders. So this is the incorrect way to purchase a car, but I'm just telling you what happens when you go to those dealerships looking for a car, okay? This is the incorrect way to purchase because now you end up with 20 inquiries on your credit profile, and it's going to drastically tank your credit score because now you have all this new credit, which is credit inquiries, and it's not giving you the full 10% of points. You know, you're pretty much getting 0 points in this category now because they shotgun your profile to 20 different lenders and they're all pulling your credit. Okay. When you have a bunch of people pulling your credit, it makes you look desperate and it makes other lenders not want to lend to you because you look desperate. Oh, you tried this bank, you tried that bank, you tried this auto lender, you tried that auto lender. Okay. You must be desperate for credit. So we're not going to approve you because what do you need the money for? Okay. So it's a very um, pull this way game. Okay. Tug of war type of thing. So you have to understand that too many inquiries is not good for your profile. Now, with that being said, I want to tell you the proper way to go about getting an auto loan so that I don't leave you on a cliffhanger. Okay. The proper way to go about getting an auto loan is going to be going to your bank. Okay. So if you got a Capital One credit card for that $1,000, you're going to go to Capital One. Why? Because you've already previously built a relationship. You might have that 1 year worth of history with your Capital One credit card, which is $1,000. Okay. You're going to go to that bank and you're going to go to their website and you're going to go to their auto loan category and you're going to apply for an auto loan. Okay. And they're going to pull your credit one time, not running your credit to 20 different lenders. They're going to pull your credit one time. And if you are approved, they will give you an amount that you can spend at the dealership or with a private owner. Okay, so you might even be able to buy cars from Facebook Marketplace, but they're going to give you a limit. Okay, and that limit is going to be what you can go and spend on a car. So if the car then fits beneath the limit that they gave you and approved you for, then you're going to get mailed the check. You're going to give them the VIN number first. They're going to mail you a check for the amount that you are getting charged for the car, plus taxes and titles and transfer fees. And they're going to mail you the check, and you're going to pay the person that's going to give you the car, and you're going to now be paying Capital One until that car is paid off, okay, your monthly installments. So it's very different when you're going to your bank as opposed to going to the dealership first. And that's the proper way to go about getting an auto loan. Okay, so hopefully you guys got that. If you did, leave a like on this video because I'm giving you guys value. And I want to be able to share this with as many people as I can. And leaving a like helps this video get boosted throughout the algorithm, which allows other people to be able to see this video. Okay, so that's a little bit about new credit inquiries, about, how to go about getting an auto loan since it fit in that category. I wanted to tell you guys about that. Now, we're dealing with the last category here, which is 10%. Okay, 10% is the types of credit used. Okay, so there is different types of credit. Okay, and how you max out this category is simply by having 2 to 3 different types of credit products on your profile. Okay, and whenever I mention credit products, I'm talking about revolving credit and installment credit. Okay, and also there's student loans in this category. You can have student loans, which is type of installment loan. Different types of loans. When you show the bank that you can manage different types of loans and you understand how credit works, they're willing to give you all the points that are in this 10% category, and that's going to help your credit score. And they're also going to be more willing to start giving you loans and things like that. Okay. So to explain a little bit more about the types of credit, like I said, you have your revolving credit and you have your installment loans. And this is a very simple explanation for it. Your credit cards, your $1,000 limit, you can draw from it. Okay, let's say you did go and spend that $200 at the grocery store. You still have a $1,000 limit. Okay, so you pay that $200 back within the 30 days, and your limit is still $1,000. Okay, so you draw from it and you pay it back. Okay, and you still have the original limit that they gave you. Now, that is revolving credit. That is a type of credit used. Okay, you also have on your credit profile auto loans and student loans and mortgages. Okay, those are in the category of installment loans. Okay, an installment loan is when they give you, that $5,000 for your first auto loan, and every month you pay on that auto loan. Okay, so you pay it down $100, you pay it down another $100, you pay it down another $100 every month. Okay, so it chips away at the overall balance, and eventually you'll pay it off. Okay, so that's not revolving. You won't always have access to that auto loan. Eventually you'll pay it off, and it will fall off of your credit. Okay, so that is the different types of credit. You have installment loans and you have revolving types of credit. And as long as you have a mixture of both, that's going to give you the full 10% or amount of points that's going to help make up your credit score and give you that 850. Okay? So all of this is a percentage of your credit score. This makes up the entirety of your credit score. So if you see, you missed a payment, then you're not getting all the points that you deserve in this 35% category. If you see that your overall utilization is too high, okay, if you have that $1,000 credit card and you're using $1,000, that means you have 100% utilization. That is terrible for your credit score, and that's why you're not getting the full 30% or the full amount of points that you could get in this category. The same here, the same here, the same here. You want to be able to max out the amount of points. Now, with credit history, that's one of the things that you can't really control. You just have to season your credit profile. The one thing that you can control, though, is you can get access to authorized users, which is something that we offer at dazzler.com, and the link is down there if you need help. Okay? So, you can manipulate this factor if you get an authorized user. You can also manipulate a lot of these other factors if you get an authorized user, but that's why we offer them at dazzler.com. Okay, so that's enough about that. Let's go ahead and dive into the credit procedure and the process, because that's one other thing that my students wanted me to talk about. Okay, so I quickly made this so that you guys can see. Hopefully you guys are still able to see this. Drop a 1 in the comment section if you are. And I'm going to briefly go through this. This is the disputing process, okay? And this is for people with bad credit, okay? This is for people who have, had that $1,000 credit card from Capital One and they didn't make that $200 payment within the first 30 days. And even after they got the interest that made it $215, they still didn't make the minimum payment on that credit card. They just said, the heck with it, I'm not paying this credit card. You guys just gypped me or whatever. And they just decided to not pay it at all. Okay? Now, this is not something that I condone because now you ruin the relationship with that bank. Even if we do go ahead and repair your credit, okay, using our dispute software and our dispute process, this is not something that I condone, okay? I don't condone missing payments just because we can repair your credit. This is something that you use in dire emergency, and then after you get your credit repaired, you never make those same mistakes again, okay? And I want to stress that, which is why, we are in the field of helping people with credit repair, but we are not in the field of condoning, defaulting on loans and, signing up for banking products or credit cards, spending money and never having the integrity to pay it back. Okay? So I will mention that before we go into this dispute process, but let's go ahead and dive into it. So this is the dispute process. For those of you that need help fixing your credit, we do offer that at dazzlu.com. Me and my team have access to a software that helps to legally remove negative items from your credit report. Okay? So step one for the dispute process is going to be pull your credit report. Okay, so you're going to pull your credit report. You can do that through the apps. Okay, now specifically, this has to be through the Experian app because they are the only app that offers the account numbers that are associated with the account. Okay, and when disputing negative items, you need to have the account number. Otherwise, they don't know specifically which account you're talking about on your credit profile. Okay, now when you pull your credit report, we recommend going to myannualcreditreport.com. That's going to give you all 3 bureau reports and is going to give you it for free. You're allowed to do this once per year, hence the term myannualcreditreport.com. I believe as of right now, though, they're allowing people to pull your credit reports every single week. Okay, so take advantage of that while you can. Go ahead and get your free credit report, look over it, and then we're going to proceed to step two. Okay, step two is going to be updating your personal information. Now, I offer my students a list of all the credit bureau's numbers because updating your personal information via cell phone is going to be the easiest and quickest way to do this. Now, you can do a letter for this, but I do not recommend that. I recommend calling the bureau specifically, each and every one of them, all 3 of them, and you're just going to simply update your personal information. Okay, so that means name. Okay, sometimes they'll spell your name wrong on your credit profile, or they'll have multiple names for you on your credit profile. You need to remove those. Addresses, okay, even old addresses. I don't care if you live there or not. I will tell them that I've never lived at the address. Why? Because this address does not need to be on my credit profile. Okay, this is not where I currently live, so delete it. Okay, and you're going to call all 3 bureaus and you're going to update your personal information. Never lived there, never lived there, never lived there. This is my address. This is what's on my ID. This is where I currently live. Delete all the other ones. Okay, same thing with phone numbers, same thing with jobs, same thing with every other thing that involves personal information on your credit report. If it is not who you currently are, if it is not where you currently live, if it is not your current phone number, if it is not, anything current as far as your personal information, you need to call TransUnion, you need to call Equifax, and you need to call Experian, and you need to get all of your personal information updated to one name, one address, one phone number. Okay, that's it. Not a bunch of different variations of you or addresses where you lived or any of that sort. It all needs to be deleted. Okay, and you will see that that in itself can actually boost somebody's credit score simply by updating their personal information. Okay, now the next step in the dispute process is going to be identifying the negative items that are on your credit report. Okay, so after you've pulled your credit report from myannualcreditreport.com, you're identifying the negative items. Okay, typically these items are either late payments, they're in collection, they're charge-offs, they're repossessions, and sometimes even there's various different things. It could be late payments, identity theft. It could be, accounts that you see on there, like I said, that are in collections, charge-offs, repossessions, and bankruptcies, okay, which is another one, okay? So those are negative items, okay? Now, those negative items need to be removed. So how are we going to remove them? Well, this is the dispute process. After we've updated our personal information, we're identifying the negative items that are on our credit report because those items are going to be the items that we are disputing. The next step is going to be step number 4, which is going to be gather the documentation, okay? So when I say gather the documentation, that means anything that supports the fact that this was a result of identity theft, this was a result of somebody else or whatever supporting documentation. Another part of gathering documentation is going to be getting your ID and your proof of address. Because how are you going to prove that you only have one address? You're going to send your ID. And how are you going to prove that you only have one proof of address? You're going to send your proof of address. Okay. So you need your ID and your proof of address and any other supporting documentation that's going to help the bureaus to understand that this negative item needs to be deleted. Okay? So with any dispute letter, you typically want to send an ID verification and a proof of address verification. Okay, that can be your auto insurance paperwork. Okay, so if you have car insurance, that car insurance is a proof of address. It has the address on there, and it also has your name, and it also has other information as well on you. But that's all they need to see is a proof of address that it was mailed to you. It has your address and it has your name. But that is a official document, which is your car insurance. Okay, and then also your ID, your photo ID. That's going to help to identify that this is you specifically who is sending this dispute letter, which is going to be number 5. Okay, you're going to use Easy Disputes 2.0, which is our software to draft a dispute letter. Okay, and I'm going to show you guys really quickly, not too long on this, what Easy Disputes is. This is our software here. Okay, welcome to Easy Disputes 2.0. This is a software designed to help you dispute any and all types of disputes. Please fill out and submit this form to receive your dispute letters via email. Be sure to have a copy of your credit report in front of you, as this information will be needed to complete the form. Okay, so you're going to click next. You can watch this video if you need to. I explain exactly how to use Easy Disputes 2.0, but simply you are going to go and you are going to fill out this information. First name, last name, address, phone number, social. You're going to select which type of item you're disputing. Typically, it's a collection or a charge-off. You're going to type what the creditor's name is, okay? Let's just say it was capital 1, which is the negative item that we're disputing, and let's say the item number was 23442 whatever XXXX, because you'll typically see a lot of X's after it. I will include those. Okay, then you're going to click next. You're going to click why are we disputing this item? And this is where you need my consultation, because I'm going to tell you typically what you should put if this is your negative item. Okay, what is the reason why we are disputing this derogatory item from your credit report? It could be I'm not familiar with this account. It could be account is late due to change of address. Dates on the account are incorrect. Okay, that's a lot about factual disputing. Could be result of identity theft, or you can click other, which is going to give you the opportunity to type something in. Okay, so you could say this item was my brother's. Okay, that's just a simple reason why you're going to dispute it. Okay, but for the sake of this video, I'm just going to click the first one. Okay, are there more items? And that's simply it. Okay, you're going to do that for every negative item on your credit report. Are there more items that you need to dispute? You're either going to click yes or no. Okay, and if you click yes, so I'm just going to run you through the process. Okay, if you click no, it's going to ask for your signature. You're going to click next. And then it's going to start asking you for the identity verification. You're going to submit your ID, submit your proof of address, and any other supporting documentation that you have to process this dispute. Okay? So that was Easy Disputes 2.0 in a nutshell. That is the 5th step of disputing your negative items on your credit report. That's going to help you draft your dispute letters. Now, once you submit that information, it's going to automatically generate you a dispute letter, okay? And you're just going to print that and mail that to all 3 credit bureaus. We do have the credit bureaus' addresses and their phone numbers, okay? So we will give you that information once you process your dispute letter through Easy Disputes 2.0. You're going to process and you're going to send it off. Now, If the item comes back verified for whatever reason, and typically it will, about 90% of the time it's going to come back verified. You're going to proceed to round 2, 3, 4, etc. Okay? So all you have to do is update us on the fact that the item was verified, and then we'll run round 2, 3, 4, etc. Okay? And eventually it's going to be deleted. Okay? That's why you have to stay committed. Now, I will tell you this. Anytime you're disputing negative items, it takes about 30 days for the bureaus to respond at maximum. They have 30 days, okay? Sometimes they'll respond a lot sooner. They'll respond within a week, 2 weeks, but it all depends from the date of you mailing the letters, okay? So, like I said, sometimes they get back to you sooner, sometimes they don't. As of recently, we've been seeing them respond fairly quickly. Sometimes they will send you stall letters. They'll say, hey, we don't believe this letter came from you, which shouldn't be so because we have it incorporated for us to sign those, and we submit a copy of our ID and proof of address. So a lot of times they have no reason to say that it's not us who is sending the dispute letters, but a lot of times they will assume that a third party is sending those dispute letters on your behalf. That is simply a stall tactic from the bureaus. You have to consider that these bureaus get thousands of letters per day that are being sent to them on various different items, and people are disputing a lot of things on their credit reports, okay? So it might get mixed up in that, round of letters where they're just sending out stall letters to the people, and they're forcing you to send another round to them of the same exact dispute letters, okay? But if the item, for whatever reason, is not deleted, you're going to keep proof of all of the letters. We do this for you within my program at Easy Disputes 2.0. We keep a copy of every single dispute letter that was sent, so that way we can send that into the CFPB. We can let them know, hey, I sent them this letter, and this letter, and they failed to delete the item. I told them that this item was incorrect, okay? And items get deleted if they're incorrect or unverifiable. They were not able to provide me proof. This item was not authorized by me. These are different reasons why item would be deleted, okay? And we're going to report that to the CFPB. Now, the CFPB is this Consumer Financial Protection Bureau. They are pretty much the catch-all, end-all. They are the people that oversee these credit bureaus to make sure they are applying by the rules and regulations that are in the Fair Credit Reporting Act, okay, the FCRA. Now, if they don't comply, then the CFPB will overthrow them and they will force them to delete the items. And if they are in fact in violation, you can actually be paid if you choose to want to sue for damages, okay? And they're expected to pay you about $1,000 per item that was not deleted, okay? So that is pretty much the gist. Oh, once an item is deleted, that isn't the end of the dispute process because you still need to add positive accounts, okay? And like I said, I teach you guys how to build your credit from zero. We talked about the 5 factors of credit. That's just half of building a good credit score. You also need the proper sequence to be able to secure $150,000 worth of credit capital. So that's very important, and I've created a sequence to teach you guys specifically which accounts and which credit cards and which things you need to start adding to your profile to get the maximum amount of limits moving forward. And I know from experience, I've secured $150,000 worth of credit capital. I know this credit stuff like the back of my hand. There is things that are being updated and renewed daily. Okay, there's new information being put out there daily, but this is still current information as of to date. So if you guys got value from this video, make sure you leave a like, comment in the comment section that you did get some value, and hopefully I'll see you guys on the next call every single Sunday at 8 p.m. Eastern Standard Time. If you are not a part of our credit community, make sure you get there. You can find the link to get access at dazzlu.com. We do offer trade lines as part of your membership. And we offer the credit repair comes with it. And also you get access to my blueprint in my sequence on how I was able to secure $150,000 worth of credit capital. Hopefully, I didn't bore you guys with this information. Hopefully, you guys did get some value, and I'll see you guys on the next one every single Sunday at 8 p.m. Eastern Standard Time. And I am out.